Thank you for tuning in to the Crystal Clear Finances YouTube channel. We're glad that you're here. If you enjoy what you hear, then give us a thumbs up and subscribe so you can always receive our new content and that you can have confidence for every financial decision. Enjoy.
Welcome to Crystal Clear Finances. My name is Crystal Langdon. I'm a certified financial planner, qualified Kingdom advisor, fiduciary, founder of Crystal Clear Finances, and your host for the next 30 minutes. Now, I understand that finances can be confusing. It's hard sometimes to know what strategy is right for you. And often, many people feel alone when it comes to finances, but that doesn't have to be the case. Working together, we believe that you can have confidence for every financial decision. Well, today we are going to talk about some financial decisions that are made, especially among accredited investors, because we're going to be talking about private equity. Now, I'm going to make a disclaimer. The disclaimer is this, is that we are not giving a personal recommendation. We are not reaching through the airways, or for those of you viewing us on YouTube, we're not telling you what you should be choosing. But we do feel it's important that everyone understand how private equity works to see so they can determine if it's right for their portfolio. Well, today I am excited because I am joined by Tim Newell, who is the director of a private equity fund called His Kingdom Resources, who I enjoy working with. And we're going to spend the next 30 minutes going over private equity. Tim, welcome to the program.
Thank you for having me, Crystal. Looking forward to chatting today.
I'm excited about what you have to share, and I know that you manage a lot of faith-based investments, and you have been in the financial planning realm for a good 30 years. But one of the things I want to ask you is, what brought it all about that you wanted to go into private equity? Because that is a little different.
It is. Well, I think I've dabbled in private equity with my clients over the years, actually 40 years, dating myself here. We've had great success with some of our accredited investor clients over the years with private equity. But more recently, Crystal, what has really driven my passion connected to private equity has been the journey that we've been on in faith-based investing, also known as biblically responsible investing. And you've probably are well aware of this in the space that you and the place that you run here, that faith-based investing often involves looking at companies and asking ourselves the question, is this a company that I feel led to take an ownership position in? Now, to put that in perspective, as stewards, we believe that we are stewards of assets that we don't own, that ultimately God owns it all, and we have been entrusted with as managers, as fiduciaries, as trustees, if you will, with assets that we don't own. And if it all belongs to Him, then it obviously matters, not just how we spend assets that are not ours or how we give resources that are not ours, but also how we invest resources that are really not ours, that they're His. And so with faith-based investing, biblically responsible investing, as we know, the first level is really asking ourselves, are there things about this company that we might want to consider avoiding taking an ownership position in, whether they're involved in pornography or gambling or abortion or any other number of different ways that they might be supporting an industry that is a compromise to our biblical worldview. And so our publicly traded models that we use in private wealth and in retirement plan accounts do a great job of helping folks to avoid taking interest in companies that could compromise their biblical worldview. But years and years ago, as a youth pastor, I taught my kids, taught those teenagers this saying, don't do the don'ts, but do the do's.
I like it.
I'll say that again for your listeners. Don't do the don'ts, but do the do's. And what I mean by that is when it comes to biblically responsible investing, it's not enough to just avoid making bad investments, but how can we invest in companies that are truly set apart and having a kingdom impact? You think of an organization like Hobby Lobby, run by the Green family, that they're giving away over half of their profits, and they're funding all kinds of incredible kingdom opportunities and planting churches and Bible translation, just doing some amazing things. And yet Hobby Lobby is not a company that you or I can invest in because it's not publicly traded on an exchange. It's a privately held company. So when you think of companies like Hobby Lobby or Chick-fil-A, or I could name it, a couple dozen others, the problem is that they're privately held. And a number of the Christian business owners that we know that have started high impact businesses that run it as a stewardship company, and that they treat it as though it's all his. Most all of those companies are privately held. And so we were led to start a private equity fund, primarily because we wanted to really do a much better job on the high impact part of investing, particularly reaching for high kingdom impact. Right. And so private equity is a way to be able to do that.
All right, so I'm going to pause right there because a lot of our listeners who've been listening to me probably for 25 years now, they know I am always talking about kingdom impact, biblically responsible investing, getting up in the morning, you say your prayers, you're wanting this to happen, and then they go to work and invest in the 401k because that's what we're trained to do. They put the money in there and it supports the very things that's opposite of what they prayed for in the morning. Now, we see that a lot in ETFs and funds and different stocks that are out there. And most, I think, mom and pop America, they're used to that. But what I want to dive a little bit deeper and say, now, private equity, now instead of going through ETFs in different ways, you're putting together something different. So private equity is you're being able to overlay that, or through the values-based high kingdom impact, you're able to choose companies. So let's talk a little bit more about that, because I want to make sure our listeners understand we're not talking about your typical fund or ETF or different things like that we've talked about where we put $25 in. There is definitely benefits in doing private equity. There's risks in doing private equity, and we're going to get to those. But there's also a threshold that you have to be at in order to do private equity. So let's talk a little bit. Let's just squirrel to the side a little bit and talk about what is an accredited investor and how does that work in relation to private equity?
Great question, Crystal. That's probably a really good place to start, to kind of lay that out there as a disclaimer. Because for the most part, there's some fairly unique categories and ways that non-accredited investors can get exposure to private equity, but we're going to set that aside because it's kind of complicated. Let's just deal with the primary way that people invest in private equity is if they're an accredited investor. Now, accredited investor typically means that your investable net worth, in other words, excluding the value of your home and personal property, exceeds $1 million. Or you have over a couple $100,000 of income every year. So there's different ways to qualify as a accredited investor. Most of the time, you need to think of private equity as being available primarily to those that are accredited investors. So, many, I would say that most all, not 100%, but most all of the privately traded companies started as private equity.
Correct, yes.
And in fact, there's more companies out there that are privately held than those that are publicly traded. And so it's although many people have never had exposure to it because they haven't, either they're not an accredited investor or they weren't given the right opportunities to be able to get exposure to private equity. But you often hear people talk about it. I wish I had gotten in on this company, named, Google, Facebook, Microsoft, Apple, before it became a listed stock. Well, those were folks that invested in those companies as private equity.
So, and what's nice about that explanation that you just gave is helping individuals realize, yes, they made that choice, but the reason why being an accredited investor is so important to invest before it became some famous company or before it went IPO is that you're literally saying, I think this idea is good. I think this is going to work, and I'm willing to put my money there. And you know what? If it doesn't work, I still can eat. I can still pay the bills. Kids are still going to college. Life will continue on. And being accredited investor to me means, okay, you're associated with the risks involved, whereas many times, and I even talking to our listeners right now, many times, how would it feel if everything you put in the stock market was gone? I mean, I know the growing pains people are having right now. They're like, ooh, I don't like the market being down at all. And it's really not lost. So accredited investors are realizing, okay, I'm willing to take the risk, and this could go sideways and I could see nothing from it. And I wish I knew, Tim, the statistics of how many people have invested in private equity only to find that it was a great idea, but implementation was so rough it never came to pass. So definitely some risks with it.
Sure.
But I want to go ahead.
That's probably a great place to start, is to talk about various different types of risks. Right now, when you look at what's happening in the market, we have a lot of volatility risk for publicly traded equity, right?
Yes.
And a lot of that risk is being driven by interest rate risk. In other words, as interest rates rise. I mean, if you look at what happened, if you invested in 20-year treasuries, a year ago, how much money would you have lost in 20-year treasuries? And yet they're backed by the good faith and credit of the U.S. government, right? And yet I still could have lost, 20 some odd % of value in treasuries. And so interest rate risk is another risk. You have inflation risk. There's a lot of talk today about inflation risk, and often those two risks are linked like cousins. When you have inflation risk, usually that brings on interest rate risk when the Fed is trying to control it. So you have volatility, you have interest rate risk, you have interest rate risk, you have time risk, all right? So the biggest risk that I have seen over the 40 years that I've been in this business connected to private equity is not as much, you would think that a lot of people have lost a lot of money in private equity. Actually, not the case. The biggest risk with private equity that I've seen is time. In other words, somebody invests in a company and they're thinking that this company is going to have a liquidity event in 3 years or in 5 years or in 8 years. And 10 years later, they're still holding that privately held stock certificate in a company that has not listed yet or had an accident. And so the primary risk that we often see when people invest in private equity is time risk. So one of the things that I would say, if you're new to private equity or you're exploring private equity or thinking about that, I would caution you about investing in a company and look to a private equity fund. The reason for that is much like the reason why you invest in a mutual fund or an ETF as opposed to an individual stock. You have some diversification risk. Or you reduce your risk through diversification. Right. And so like when we put together the private equity fund that we currently have sponsored, the goal is to invest in 12 companies and have diversification across those 12 companies, various different types of asset classes and businesses. But also that type of diversification will, the goal is to have a third of those companies that we're invested in positioned for an early stage liquidity event so that we can get our principal back to the investors as quickly as possible. And that way the remaining liquidity events that are yet to take place. So if we have a liquidity event 24 or 30 months into the fund, and that $1 million investor has $1 million, $2 million, $3 million, $4 out, they've got all of their principal off the table, and the remaining 10 or 11 companies that go through liquidity are just add-on profit. So they take that primary risk off the table, which is time risk connected to private equity. Does that make sense?
Such a great explanation. I appreciate that. And I would love to go down the rabbit hole of what they do with the extra profit that happens after they've got their initial money back. But I'm going to put that on pause for a moment before I get too far into this, because we talked about the risks. So generically, what is the benefit, as somebody could say, well, I can just go put it into mutual funds or this group of stocks I have. What's the benefits of taking such a risk?
Perfect question. When you look at the affluent investors that are out there, many of them have made an awful lot of their wealth through private equity. Mm-hmm. And it's not that one can't do well and experience great growth over the years investing in publicly traded funds or publicly traded stock. One of the big things that a foundation or funds try to do in using private equity is have a non-correlated asset class. In other words, have some component to your portfolio that is not correlated. In other words, it doesn't go in sync. It doesn't rise and fall in sync with all of the other investments in your portfolio. Because if everything that you have in your portfolio is all publicly traded and the markets are declining as they have over the last 6 months, you're seeing an awful lot of those positions decline all at the same time.
Right.
And then you have times when it's unique where you have right now where both fixed income is declining at the same time that publicly traded equities are declining. Mm-hmm. So it makes sense to have a non-correlated asset class. It's non-correlated to cash, it's non-correlated to fixed income, and it's non-correlated to publicly traded equity. So it doesn't move in sync with those. Does that make sense?
It does. And I think that's a great explanation just of one of the many benefits that can be experienced if it goes the way that we're hoping with it. As far as when I look at the other benefits, can you briefly just touch on them? Because this isn't like I hope I get a 5% return or whatever it is, averaged over 20 years. There's other possibilities. And again, there is, just for disclaimer purposes, for compliance, we're not guaranteeing anything, but we just want to open the horizon to say, hey, let's pick our head up and let's look. If we're accredited investors, there are more options that are out there for high kingdom impact.
Yeah. Well, let me, without getting too deep into the weeds, how we've structured the fund is we look for 5 criteria in any company that we invest in. Mm-hmm. So number one, we're kind of unique in that the only companies we invest in are companies that are Christian owned. Companies that the owners and the C-suite of that company treat that company as though it's not theirs, it's God's, and that they're just a steward of something that they don't own. So we want them to run that company in a Christ-like way with their customers, with their employees, with their clients, etc. That's the first criteria that we look for. Crystal, that eliminates an awful lot of companies.
Oh, absolutely.
It's really cool how it attracts great companies to us as well. Because companies that are Christian owned, they're looking to be able to connect with a firm like ours. But then goal number 2 and 3 of what we look for are kind of similar. Goal number 2 is we're looking to invest in high impact companies, and specifically high kingdom impact companies that are specifically designed to be able to have an incredible impact on growing the kingdom. One of the first companies that we invested in this fund is uniquely positioned to be able to expedite Bible translation.
Yes.
And you talk about having high kingdom impact. They just finished last September. They rolled out the Malay language project that they did in 7 months, Crystal.
It's unheard of.
Right. And if you know anything about Bible translation, historically, whether you're talking of Wycliffe and one of the other 11 major Bible translation organizations, typically it takes decades.
Yes.
Well, this company was actually born out of one of the 11 major Bible translation organizations, the Seed Company. And this company, Avoda, that we invested in, is right at the cutting edge of using deep learning AI technology to expedite the process of Bible translation. And they finished the Malay project in 7 months. They're working on another 4 that they should be done any time now. And then they're going to 40 and then to 400. Well, you talk about having high kingdom impact. and the ability to be able to touch people right at that point of need, to be able to get God's word to people in their mother tongue.
Right.
I mean, that's an incredible way to have high kingdom impact. And yet that same company has a indirect kingdom impact side as well, which is goal number 3, reaching for indirect kingdom impact. A way to be able to have common good. So Bible translation is more redemptive good, right? And what they're doing on the other side with Avoda Med is for common good. And they're doing virtual medicine. So imagine this Zoom meeting that we're on, you were on with your doctor, and it's not just a Zoom meeting, but the technology in the doctor's computer can study 5,000 different points on your body. And to be able to help that doc do a better diagnosis of exactly what it is that he or she is dealing with. Just amazing. I mean, I could take another hour and unpack the amazing, both common good and redemptive good that we can have in a company. We look for that to be able to have both. The fourth thing that we look for, which folks are always really excited about, is we're looking for to invest in companies that have a very clear pathway to a high return multiple. Now, the way that we as a sponsor measure a high return multiple is we're looking for companies that have a clear pathway for a 10x return or better. So in other words, if I put $1 million into a company, I'm looking for 10 million or more out with a liquidity event. And it's tied to the fifth goal, which is within the time frame of the fund, which this particular fund is a 5-year fund. So as your listeners are looking towards a private equity fund, you're looking for what is the time frame of that fund, what is the characteristics of the companies that they're looking for to invest in. Sometimes private equity funds can be all high tech. Sometimes they're all disruptor companies. Sometimes they're in the med space. Sometimes they're in all AI. So there's various different industries that a fund can try to specialize in. We intentionally have tried to diversify and have exposure to several different industries to add to the diversification, which reduces the risk.
I know, as we've talked about that was one of the things that I saw, and that was such an attractive feature there. And one of the things that I know we've talked about offline and many other conversations that we have is this is not about building private equity so the wealthy get wealthier and we buy more yachts. This really is about creating wealth so that we can expand the kingdom of God and have kingdom impact. Great.
Man, you're hitting on all of my passion nerves here. This fund is very, very different than any other private equity fund. I'm not saying that they're not out there, but the ones that I've had exposure to have primarily been designed to make really wealthy people a lot wealthier. And it's not that can't happen with this fund, but that is not the primary objective. The primary objective of this fund is to come alongside of kingdom-minded investors and show them ways that they can have leverage on their extravagant giving. So these are typically already people that are passionate about giving and wanting to fund the kingdom. But we believe that I'm just going to go out there and put it this way, that some of the Christians I know that have been entrusted with much are also incredible givers.
Yes, they are.
And there's some of the biggest givers and sometimes you don't even know that's who Frank and Alice is in that congregation that's doing those, writing those huge checks every year, not just to that church, but all the many ministries that are being funded. And our passion is to come alongside of those and help give them leverage to their giving. What we're also looking to do is to be able to come alongside of that person that God has he's planted something in their heart that they're a giver, but they know that there's something more.
Yes.
And they want to be able to build legacy in their giving strategies. For years, I've been doing high-end charitable estate planning and helping people put together charitable-minded trust and different types of giving through their trust out of their estate.
Right.
Well, imagine if we could move that giving up while we're still alive.
Yes.
And have that giving going out of, have that extravagant giving coming out of the wealth that God is creating in that portfolio for that purpose.
Mm-hmm.
So if I go back to the goals of this fund,
Right.
the goals of this fund are not only to invest in things like Bible translation in companies that do that, but also then to give to things like Bible translation and to fund Bible distribution and helping young women that are unwed mothers do things to help to keep them from aborting that baby and to support them, to lead them through to adoption or whatever God is leading towards. Helping women and children and others get out of human and sex trafficking. That's some of these huge problems that take incredible resources to be able to have impact in each of those areas. Well, as a fund, we're passionate about funding kingdom opportunities like that. But we also want to lead by example, but to motivate. We can't require investors to be big givers, but we want to inspire them. We want to lead by example. So our passion is to give away, giving away half of the management fees, giving away half of that carry, which I should probably talk about in a minute, but to inspire investors that if we can take that $1 million and turn it into 10 million or 15 million, and if all of them, if they just tithe plus on that, tithe plus. I was just having a conversation with a good client of mine. He's been a client of mine for probably 18, 19 years. And they're just having a blast dreaming about all of the amazing kingdom impact opportunities that they're looking forward to funding out of their private equity growth that they're experiencing.
Oh, Tim, this is exciting. And I'm so grateful that you're sharing this, because I'm sure you're just whetting the appetite of all of our listeners and the accredited investors out there. And it's hard to believe that we're already at the end of our time together. I've got to ask you to come on another program with us. I'm sure I'm going to have my phone ringing where people are wanting you back. But Tim, thank you for encouraging us and reminding us that this is about expanding the kingdom. Everything we do that we've been given stewardship over is about how do we further the kingdom of God and make high impact giving. I believe strongly, Tim, you're part of the piece of that puzzle. You're part of the plan that God has on what he's doing. So with that, I want to thank you for being with me. I want to thank all of my listeners for tuning in on the radio, and of course, those of you watching us on YouTube. And I want to encourage each and every one of you, give our office a call at 518-433-7181 and join us again next week as we continue to provide financial clarity so that you can have confidence for every financial decision. Thank you. And God bless.
Thank you for watching the Crystal Clear Finances YouTube channel. If you enjoyed this program, then give us a thumbs up and make sure you subscribe so you never miss an episode. And if you'd like to meet with one of our financial advisors, feel free to give us a call at 518-433-7181 and gain confidence for every financial decision. Thank you, and God bless.